Good afternoon, Scott Redler, T3 Live. I'm just going to do another quick update on Apple. I do trade this all the time. I trade it differently based on the composure of what's going on. And although it's been a lot more profitable being an investor in Apple throughout the course of the last decade or the course of the last few years, intermediate trend traders approach it differently based on what's going on. So I just want to go over the action real quickly, just so I could talk you through some things you could have seen and what's going on right now. Quickly, if you take a look at Apple, if you follow me on Twitter, on the site, you remember after it reported earnings, you had a pretty big gap down. Okay, for 3 days in a row, it went sideways, held support, and that's when the new trend started. You had a quick line, beeline up, it held higher. This is when it started to go and follow the 8 and 21-day moving average. Multiple entries along the way. This was one of my first swing trades right here. And typically, just to fast forward, it followed the 8-day all the way up, and then touched the 21-day right here for the first time before going again. And then right here, this is when it changed. This is when it hit 700. You had a little bit of a breakout failure, not extreme, so it wasn't a sell signal 100%. Some people definitely trimmed some, saying, it's above 700, sell the excitement. And then remember 5 million iPhones right there, gap down, and it never filled this gap. Right there, that was a little bit of a clue saying, be careful, something might have changed. So on that particular point, remember talking about this 683, which was that low. That Tuesday, off the charts, we talked about if we break the 21-day moving average, the trade has changed. If you've been trailing along all the way from when it triggered here, or when it triggered here, or here, whenever, that's when you get out and get tactical again. And that's when Apple left my VTF. Okay, that's when some people actually got short. So here's what happened. Boom. Closing the lows, had a little follow through, a little bit of a snapback. What happened? The moving average contained the move. Then it's been tactical ever since. You had a move down to the 50-day. From the 50-day, you had about a 20-point move, 3 days long. Then you had a small little active reversal right here, right? Wasn't this an active reversal? Opened up, traded through the highs, so that was your sell signal if you were trailing it. Nice trade. Then some guys flipped short. Then what happened here? Something a bit different. Closed below the 50 days. Some guy said, I'm going to take that home short. Last time it bounced, this time it closed below it, probably goes lower. At that same particular moment, on a more macro level, this little head and shoulders formation was being built. Left shoulder, head, right shoulder, and here was your neckline, a level that, even if you don't want to call this a head and shoulders top, a level that it closed below, engulfing this entire upper range. At that point, I think I was flat. If you follow the VTF, didn't really have it anymore. Should have shorted it, but I didn't. And then you had to move all the way down to where the 100-day was. Okay, it also matched up to where we broke out from. So this was a good area to get long. And we tweeted about it, we talked about it. You could have got long at like 625, or you could have got long, when it went into this area and showed some commitment. Then what did you have? You had a move over the prior high for cash flow, 640 and change. That gave you day 2. Then here was day 3. Nobody knew what was going to happen on day 3 except for the moving averages were curling down. And last time we held the key moving average, what happened on day 3? You got a sell signal. So this one was even bigger, right? This one opened up, diverged today, traded back below yesterday's high, and that was your sell signal. Okay, I actually made some money shorted today. So now look where right now it's 330. Look where the stock is. It's at 630, showing absolutely no commitment to this bounce. All right, so as of now, what do we know? We know that this point of reference is right here, 623.55. We know the 100-day moving average is right at 622. We also know that if you're in the camp that this is a head and shoulders top formation, here's 700. You go down to 660, the neckline. It's about 40 points. So from 660, 40 points lower is about 620-ish also. Okay, so here's like a really big area. Here's an area that some guys are going to be watching. Typically, if we go down here and retest this area so quickly, I don't think it holds. So then if we break this area, we're going to have to look at some new support. You go to another support level and you see that, you have what? 611, which is another area. So all in all, the action has been weak. If you take Apple out of the name and just traded it based on the composure since it hit a top at 700 and broke the 21-day, you've been trading it very well, both from the long and short side. At this point, it's hard to be short going into, big support from 2 days ago, but, that's probably what the good book would say to do. All right, so at this point, if you go home flat, I think that's probably the better bet, and then maybe try it versus pivot. If it doesn't break it, get out of the way again. For all you macro investors, just so you have some hope that, last time everyone said game over was here, look what happened. Stock went from 644 before reversing all the way down to the low is 528. Okay, so what's that? 120 points off the highs. 120 points off the highs would be a less percentage. Okay, and that would bring you down to about 580, almost to this gap, which is really big right here. Actually, this gap here is 600. 580 comes all the way down here, 700 to 580, 120 points, and that's also the 200-day. So what's going behind all this action on a fundamental standpoint, okay, is the fact that people know, it's not a secret, that the iPhone 5 is hard to get. There's a supply glut out there. I've gone to the store 2-3 times just to do a little research, and you cannot go to a store and walk in like a normal person, convenient-wise, and buy an iPhone 5. You have to either go into a lottery, you have to order it, whatever. You can't even get one from Verizon until October 28th. So with that said, they didn't have much time to sell these things. Okay, they had about 8 days when it was actually announced for this quarter. And a lot of people, no one was buying the 4 or 4S. So the consensus is that estimates were too high. They're starting to come down. Third quarter is not going to be good. So for all you macro investors looking for an entry, if they keep selling it off into the earnings day, which I believe is October 25th, then perhaps maybe we take an in-the-money call or some kind of call spread because it was discounted enough to price in bad numbers for what could be a very robust fourth quarter, for what could be a very huge time for Apple to get it back in motion. But the question will be then, does it go down like it did last quarter, hang out a few days, then go up, or does it just go up? So at that particular point, we will figure it out, but that's not for a while. As of right now, it's a two-way trade, both long and shorts working. If you're a macro investor and you've been there for years, people have told you in the past that it's been game over, and it hasn't been. So this time, according to probabilities, it's probably not. The valuation is low. They still have a lot of more products going on and just a lot more positive things in Apple. But what you have to notice, watching price right now, it's just weaker than the market. It's leading us lower. Technically, it's breaking. And we will measure that along the way, and we'll try not to have opinions that Apple is the ticker. We'll just keep watching the composure of the stock because there's been many big stocks out there that started to give clues that the better days were behind them. And if you took the name out of the stock at the time, you could have saved yourself a lot of money if you used proper rules, proper precautions, some type of hedges, whether it's in the money calls, whether it's collars, whatever it is, to protect yourself instead of just closing your eyes and going underwater. Manage positions, manage your trade, and I'll be updating this again, I'm sure, in a few days. Have a good night.
Hi, I'm Sean Hendelman of T3 Live, where we train, coach, and mentor traders in order to help you put your money to work with confidence. The T3 Live approach is a blueprint for you to recognize, adapt, and ultimately take advantage of different market conditions. To begin your training with T3 Live, we would like to offer you the opportunity to enroll in our free 30-day online home study course. Fill in your name and email address, and I'll see you on the other side.